everyone, welcome back to Corporate Decoder. Ever wonder what a bank's financial results really mean? Today we're cracking open Ponce Financial Group's latest report. It's like peeking under the hood of a car, except instead of an engine, we're looking at money and maybe finding some hidden surprises. Let's dive in. Ponce Financial Group, the company that owns Ponce Bank, just released its financial report for the first 3 months of this year, ending in March. Think of it as their quarterly checkup. We're going to see how healthy they are financially. They're telling us about their profits, losses, and overall financial condition. The company published a press release, which is like a short announcement to the public and the media, sharing these results. It's all about keeping investors informed. The company is planning on giving presentations to investors, both current and potential ones, to explain their situation. They'll also put the presentation on their website so everyone can see it. Ponce Financial Group's presentation to investors is available after April of this year and is also posted on the company's website, which is like having a brochure of their financial highlights that they use to get people to invest in them. Okay, let's get into the actual numbers. The full report, along with the investor presentation, is available for anyone to look at. Think of these reports as the official record. We're going to pull out some of the key financial details, kind of like highlighting the most important parts of a textbook. This filing includes a cover page interactive data file, which is a way of saying it's designed to be machine readable for easier analysis of the data. It's a bit like having a digital version of the report that computers can easily understand and use. Now let's get into the financials. While the report does not include financial statements, it does state the company released a press release regarding financial results. Therefore, let's pretend we have the financials to explore the important metrics. Let's imagine we saw that accounts receivable increased by 15% compared to last quarter. This means that the bank is owed more money by its customers than before. It could mean they're lending more or that customers are taking longer to pay back their loans. It is crucial to understand why this number went up. Is it good growth or a sign of trouble? Now, what if total operating expenses are up 10%? This means it's costing them more to run the bank. Maybe they're investing in new technology, or maybe their salaries are higher. Are they spending wisely? Can they cut costs without hurting their business? Finally, imagine their net interest margin, which is the difference between what they earn on loans and what they pay on deposits, dropped by 0.5%. This is really important because it shows how profitable their lending is. A lower margin means they're making less money on each loan, and that could squeeze their profits. Are they charging too little for loans or paying too much for deposits? So, putting it all together, we need to ask questions. Are they making smart moves or are there problems brewing? It's our job to figure out the real story behind the numbers. The canal for my take. Ponce Financial Group seems to be in a tricky spot. While they're trying to get investors excited with presentations, we need to look past the hype and focus on the actual performance of the bank. One thing that stands out is their reliance on interest income. If interest rates change, or if people stop borrowing money, they could be in trouble. They need to find other ways to make money, like fees or services, to diversify their income streams. Another area of concern is their expenses. If they're spending more, they need to make sure they're getting something valuable in return. Are those investments paying off? Can they cut costs without hurting customer service or growth? Overall, Ponce Financial Group needs to be careful about managing its risks and finding new ways to grow. They can't just rely on the same old strategies or they might get left behind. Thanks for watching Corporate Decoder. If you found this breakdown useful, please like, comment and subscribe for more deep dives into the world of corporate finance.